Good morning, everyone. Thank you so much for joining us today for the Radisson Mining Technical webinar. We're very pleased to have so much interest in this webinar today with about 212 registrants for the event. I'm pleased to pass over to Matt Manson, who will give the intro to the team.
Thanks, Christina, and thanks everyone for joining us this morning. I'm going to do a quick intro to who you'll be hearing from. You've got myself. I'm the President and CEO of Radisson Mining Resources. You're going to be hearing a lot from David Ross, who's our Vice President of Exploration. We've got Hubert Parent-Bouchard, who's our Chief Financial Officer. The three of us are going to be kind of stick handling the presentation. Should be about 45 to 50 minutes. We're going to try and keep it under an hour, including Q&A at the end. That's the objective. Christina Pilon is our manager of IR. She's who you talk to on the phone very often, and she's going to be stick handling the Q&A at the very end. Okay, so just for those of you who might be new to the project, we're going to get into the weeds here technically in this presentation. That's what this is for. But we're about 2.3 million ounces in all categories on the highway in Abitibi. One thing I wanted you to take away from this webinar is growth. This is an obsession that's going to be focused on exploration and drilling. I'm going to give you the background. I'm going to set the stage for where we're going with the drilling, and why we're going there. Dave is going to come in the middle here, and he's going to get you into the live leapfrog model. So he's going to be showing you live drilling, live geological modeling, and hopefully you'll get a sense of the purpose of the drilling that we put out in drill results every few weeks. And then Hubert and I are going to come in at the end and talk about the next steps and talk about the company and its financial strength and where it's going. But of course, on the highway here, those ounces are immediately adjacent to two neighboring projects, very good projects. The LaRonde complex with Agnico Eagle, which is just literally over the back fence from us. And then down the highway and up a little bit, you've got the Westwood Doyen complex of IAMGOLD. And so that's very much setting the stage for who we are. Forward-looking statement, of course, very important. I'll let you peruse at your leisure. And in the more broader context, we're in the Abitibi here, in Quebec's Abitibi, incredibly prolific part of the world for gold mineralization. You've got Rwanda, about 40 minutes drive to the west of us. You've got Val d'Or, about 40 minutes drive to the east of us, and that's on the Trans-Canada Highway you're driving on when you do that. We're just outside the town of Cadillac, and where you see LaRonde and Westwood Doyen there over the back fence, but we've also got Malartic just to the east of us, second biggest gold mine in Canada, Agnico Eagle. Sigma Lamaque complex with El Dorado, Kena with West Dome, Goldex with Agnico Eagle, and that's just on that Cadillac Larder Lake break segment between Rouen and Val d'Or. So a very prolific part of the world. And again, I'm going to invite you in your leisure to go onto our website and go onto the Verify deck that's there, and then you can really tour through our project and through the current drilling and the resource with some detail. These are screen grabs taken from Verify. We're not using Verify today, but these are screen grabs. Again, there's the claim position outlined in blue. That's the town of Cadillac. The mine is just, the old mine, O'Brien, is just to the north of there. That's what it looks like with an aerial photograph on the left. When you look underneath the surface, that's just infrastructure you're seeing there. So you're in the white, you're seeing active operating tailings facilities. There are 3 mills on that page currently, one at Westwood Doyen, the Doyen Mill, and 2 at the LaRonde complex. Multiple shafts and multiple elements of infrastructure at our own project. The old O'Brien mine there is in the foreground, shafts, lots of underground mine development. So, a wealth of existing infrastructure, highway, railway, power line, town, right? Everything is here. And when you put on the ore bodies, you see just how close everything is underground. There's the 2.3 million ounces, all categories from O'Brien in the foreground. And in the pink, it's a bit of a cartoon of our neighbors' ore bodies. You've got LaRonde in there, you've got the Bousquet deposit, you've got what's called LZ5, you've got Westwood. It's a wealth of gold mineralization. And the same image looking towards the north and down. Again, the message here is lots of gold and everything's very close. Okay, so let's get into, we're going to give you the background here on the drilling and why we're doing what we're doing. So there's all these ore bodies again in sectional view at the bottom, plan view in the top, and everything is touching 2 kilometers or deeper depth. There's our current resource from March in the middle and about a 5 kilometer strike extent on this belt. Um, so our geology here, we're in the Pichet Formation for the geologists out there, which is a sandwich of metasedimentary metavolcanic rocks principally, up against the Cadillac-Larder Lake Break, which is a very long, hundreds of kilometers big structural break. Um, and we have high-grade quartz sulfide gold veins within the Pichet. This trench, which we opened up just 30 meters from our core shack last summer, shows you all the elements of our geology in one place, and that's why we're showing it here. So that is a tuffaceous rock currently, the TX there, and you see the boundary. The brown color in the middle is a biotite alteration zone that's about 3 meters wide. That has gold mineralization within it, and the alteration has been caused by that thing in the middle, which is a quartz vein coming through. It's got a big Z fold in it. On the edge, you've got a band of semi-massive pyrrhotite and pyrite sulfides. So you've got the sulfide association there with this mineralization. And then at the nose of the fold, chunky inch scale gold um, with going down the hinge of the fold. So the whole thing is mineralized, and that trench gives you the complete package of gold mineralization at O'Brien. Now, that's what the old timers were mining in the old mine, and that's what we're drilling when we issue a drill result. We are drilling with an inclined hole going through that. That's dipping at about 80 degrees to the south. We're drilling south to the north. We will press release an intercept that might be 6, 8, 10 meters long. That's the core length as we go through that zone obliquely. It'll grade 3, 4, 5, 6, 8 grams per ton over the whole length of core. And we've almost always got an including 10, 20, 30, 100 grams per ton in the middle of that intercept. And that high grade hit in the middle, that 1 meter, including in our press releases, is us going through the vein in the middle of the alteration envelope. And to mine that, that's about a 3 meter wide minimum width. This is a relatively small zone. Sometimes these zones are bigger, they're wider. Sometimes they have multiple veins within them. But that's a long hole stoping opportunity there at that type of width with a generous allowance for dilution on both sides. And the most important thing is demonstrating continuity of that type of mineralization. And we've got lots of evidence from the old mine and from the current drilling and from trenching that the continuity is looking pretty good. So that's a quick geological tour. We take that understanding and then we model what's happening in the drilling. And here's an example that we already published of multiple veins below the old mine where we're seeing intercepts with multiple zones, just like the one I've shown you, and that is modeling quite successfully into a package of veins showing continuity below the old mine. The old mine is shown there in gray. They mined for about 1,000 meters below surface, and they were high grading. They were picking the eyes out of this vein system at 15 grams average grade, and they produced about almost 600,000 ounces at average grade of half an ounce, 15 grams by doing that. They were probably using a 7, 8 gram cutoff. We're using now a 2 gram cutoff for what's ore for us. And on that basis, we're picking up all of these parallel structures and putting them all into the model and into a future resource. And Dave will show you this in more detail shortly. When we put our press releases out, and we put out 4 drill result press releases now since March, 2 in June and 1 just last week, we're showing you these 3 views in every press release. On the left, you've got the cross section of the geology. Top, you've got the plan view of the geology, and bottom right, you've got the long section of the geology. On the cross section, that's us looking west. So that dark purple stripe is the Cadillac-Larder Lake Fault Zone, this hundreds of kilometers long structure. The green units on the left or hanging wall side of that structure is the Pichet Formation. The pale green on the far left, the far hanging wall, is what was called the Pontiac Formation. That's a big slug of metasedimentary rocks going off to the south. And on the north side of the purple zone, north side of the structural break, we've got the Cadillac group, metasedimentary rocks, principally again there. We've got resources everywhere. We've got resources in the Pontiac, resources in the Cadillac. Most of our resource is in the Piche, and that's the colored bands you're seeing there. There you're seeing the drilling coming south to north, the hits as we go through these mineralized zones, these alteration envelopes with the veins in them. And then we're showing you what that looks like from a resource point of view in the plan view there. The gray is the old mine. You're looking straight down there, and you're seeing the new resources principally on the east side of the old mine. And then the long section there is orient, the bottom right is really the most useful one. It's orienting where the drilling is going, how we're pushing things down, the holes we're filling. And again, Dave's going to take you through this in more detail. This project's growing fast. It was about 900,000 ounces in all categories in 2023. It was 1.5 million ounces in all categories last year. It's 2.3 million ounces as of this March, using a Jan 31st cutoff, and it's still growing. And the drilling you're about to see is telling you that story of continued growth. But this is how we're doing it. Top right is the resource as of last year, and then the drilling we did last year below the resource, below the old mine, all the hits we were getting, again in that long section view. There it is filling in below with the new resource that we put out in March of 26. And that was an 8% increase in indicated, but an 82% increase in inferred resources. And that's what we're going for here. This is a step out program, 140,000 meters. That's counting meters from last year, this year, and into next year. 8 rigs currently active on the site, drilling these deep, long holes with wedges coming off them. We're not going for delineation here. We're not trying to infill. We're not trying to design future mining stopes here. We just want to know how big is this mineral resource? How far down do these veins with alteration envelopes go? And so far, we haven't found the bottom of this thing. So that was the 25 drilling. We banked a resource in March 26. We're going to bank resources on a step-by-step basis as we go through this program. We're not going to just tell you what we've got at the end of 140,000 meters. We're going to do it on an interim basis. And that was the interim resource update as of March of this year. And it's a technical webinar, so I'm going to show you the technical numbers and all the footnotes for the record. On the left, we're comparing the resource from 23 to 26. The 25 resource was kind of an interim stage where we didn't re-estimate, but we reblocked. So a bit of a technicality, but the drilling results have been really between 23 and 26. So that was where we went from 950,000 ounces in all categories, brought the cutoff down from 4.5 to 2.2 grams for this exercise. So that did give us more ounces at a lower average grade. But the bulk of these extra ounces that are coming to us, and they are on the histograms on the right, you see the growth since 2019. The bulk of the new ounces are coming from this deep step out drilling we're doing, where we're genuinely discovering new zones and adding new resource areas. So it's been a terrific process so far. Okay, so where are we going? This is the target. So there is the 2026 mineral resource. We have told the market that we believe there's an extra in the form of an exploration target, 0.6 to 2 million ounces at similar grades, 4 to 6 grams per ton, using that roughly 2-gram cutoff, with generous provisions for the scale of things. So that takes us upwards of 4 million ounces, and that's to 2 kilometers. So if the resource continues to grow downwards, as it has been, to that 2-kilometer floor, the target is upwards of 4 million ounces, right? So what you're going to see next is we've shown you the 23 to 26 jump that gets us to the 2.3 million ounces and how we drilled and we filled in the resource. What's coming next now is the drilling beyond that, filling in this area below the March 26 resource. We've got this graphic going down to 2.5 kilometers because we're not going to stop at 2 kilometers. We're going to go to 2.5 kilometers. And why are we doing that? That's very deep. It's because of all of that infrastructure around us. It's because there's infrastructure around us. There's shafts, there's mills, there's tailings facilities. The costs of entry for our business is quite low because of that infrastructure. And specifically, there's a 3 kilometer shaft, which is in the general area, which next door to us, which is within reach of these types of depths. So everything down to that depth is potentially mineable for us. So we're not worried at all about depth, right? We're not thinking in those terms. We're thinking, let's just find out what's here. And we've got a very deep economic floor. So let's go for it. And 2.5 kilometers is going to be the next stage down. And so this is going to pass now over to Dave. This is the drilling that we have completed and press released in 4 news releases since March of 26. Again, long section view showing the existing resource. And Dave is going to take you through this area. That is what we call O'Brien Mine East. This is the extension of resources below the old mine. And he's going to show you what's happening there. He's going to take you to what we call Trend 1. That's where we've had our deepest intercept to date at 1.9 kilometers. And recently have added another deep intercept there from our press release last week. He's going to show you what's happening there. He's going to take you to this area, which we call the Trend 1, Trend 2 gap, or why it's important for us to be drilling at those shallower depths, why we're doing that. And last week, we announced the highest ever drill intercept, 1.6 kilograms per ton of gold. There's the video for it, really spectacular. That actually came from that location in the Pontiac sediments in the hanging wall of the main mine. And Dave is going to take you there and show you what we think is going on in that location. So I'm going to pass this off now to Dave Ross. I went through all that pretty quickly, but hopefully that was useful. And I'm going to stop. I'm just going to warn you, everybody, we're taking you live into the guts of the model here. So we're not worrying about this thing being completely polished and choreographed. So I'm going to stop sharing. Dave's going to start sharing Leapfrog model, and he's going to tour you live through the model and switch things on and off. And then he'll pass it back to Uber and myself.
Okay, thanks, Matt. Can you see my screen okay? Yeah. Yeah, we do our best, as Matt said, with those in the press release with the 3 sets of sections, vertical, plan view, and longitudinal. And we also have a verified deck hosted with Verify. And this is a very 3-dimensional geometries here, obviously. Lots of drilling, lots of infrastructure. So we thought that this webinar would be helpful just to run you through live, similar to what we do with the exploration team at site almost every day, reviewing drill hole results, reviewing drill hole trajectories, everything. Again, Leapfrog, one of this 3-dimensional software is the best way to understand what's going on below the surface. But just to set the stage a bit, this is where we are, satellite image of, here's the town of Cadillac. This is the Trans-Canada Highway 117. That's the highway that goes up to La Ronde. Shown in the dark line here, that's the Cadillac break. As Matt said, it's 250 kilometers long. Is endowed with more than probably 150 million ounces of gold from end to end. So I'll just zoom in there a bit. You can see our camp facilities. You can actually even walk there from town. Core shack, offices, a bunch of core houses. So I'm just gonna, and then this clearing here is the high tension power line that runs through the property. So just take that, I'll rotate it up. Now you can see a similar view Matt was looking at. These blocks here, again, I should note I'm using a bit different of a color scheme than the one you see in our news releases, but I'll leave it over here on the right. This is the resource from March this year. You can see the openings from the old historic mine. Things line up quite well with the new drilling, which is to be expected. I'm just going to rotate it around. This light blue surface here, that's actually the 3-dimensional model of the Cadillac break. So as I rotate it around, now we're looking west, and you can see the amount of drilling we've already done in the mine, in the project. And as Matt said, the bulk of the resources are in the P-shaped formation. But if I rotate it around a little bit more, now we're looking south. and the Cadillac breaks blocking us from seeing the blocks in the Pichet. You can see there's a zone right here that's called the vintage zone. It's actually hosted in the Cadillac sediments, and it's a higher information hosted gold. So that's an exciting target. And you can also see there's not much drilling here. So there's our information hosted targets on this side of the fault, which we just have not gotten to yet. As Matt mentioned, this is a growth story, and our objectives are growing the resource. Same thing, same block model, same openings. Now I'm showing the drilling that has been done since the March 2026 resource estimate. I'm also showing some of the targets we've developed, and we're planning. There's different spacings to these targeting clusters for different reasons. But I can just zoom in there now. The color scheme for the drilling since the resource estimate it's different because we have 8 drills there. So we have 8 drill holes that are currently going. There's one here in the mine west. There's one here in the central area in red. There's one here, it's hard to see. It's doing some infill directly below the openings. That's 385. And then we have one down here at depth. That's 378. You probably recognize those numbers from the news releases. That's 1, 2, 3. We have one here drilling from the north, which we'll talk about later. You can see that it's a bit different for us, that orientation, because to drill this area, called trend 0, there's just some surface infrastructure in the way, a couple of houses, etc. And we have good relationships with our neighbors and the people that live in Cadillac, and we want to maintain that. So we're doing that hole from the north. So that's 1, 2, 3, 4, 5. We have 6 down in the deep in trend 1, and that's 384. You may recognize this hole here. This is from the last press release. That's the wedge 1. That was a nice hit there in the July press release. There's one drill hole in here finishing the gap, and we've just started drilling this hole where we're looking for new trends out in this area. There's a lot of targets here, a lot of work to be done. Definitely no shortage of targets in this project. A lot of our focus is, day to day is obviously logging the core, sampling, etc. But a lot of it is tracking these drill holes, which ones make sense, which ones we should prioritize. So a lot of our job is doing that type of work. And to do that, we will often, probably always, keep a live model of the veins interpretation as we go. So every hole we drill, get the assays back, the legit logs in the geology, we update our models to know and to make informed decisions on the planning the next cluster of holes or even the next branch of holes. Okay, so that's the background of what we've been doing since the March resource estimate. Now, to dive into some of the results that Matt mentioned, there's 4 areas. There's that he just mentioned at the last 2 slides. There's this area below mine east, well drilled now. That includes, if you're following the press releases, hole 337, which was the motivation of continued drilling down deep. We also have 385 and 378 down here. We'll also talk about trend 1 here, and then the gapping. And then finally, we'll talk about that high grade hit we released last week. Okay, so just focusing on this one area, which has been subject to a lot of news release. I'm going to just cut a vertical section this way. Again, this is the kind of thing it's difficult to get in 2-dimensional PDF news release or even verify. So I'm just going to cut that and just rotate it around for you, give you a sense of what it looks like underground. Lots of drilling now. There's 3 pilot holes here, as I said. One of the pilot holes, the first one, 337, we were able to drill 15 wedges from it. We use a combination of wedging, or like iron wedges, and directional drilling. We have 2 teams of directional drilling on site that move rig to rig to get the drill holes where we want. So this shows the vein interpretations as wireframes. It shows the assays along the drill hole traces. I put on the visible gold as these yellow bubbles too, so you can get a sense of where the geologists are seeing the coarser gold. It's interesting to note there's excellent continuity under here. Almost all the veins, that interpreted veins, are intersected by multiple drill holes, some by dozens of holes. And this particular vein here, I think it's C30, sorry, B3CO3. It has great continuity and it joins perfectly up with the stopes of the old mine. So that's the vein they were mining. As Matt said, they high graded the mine. The cutoff grade was probably 7 or 8 grams per ton for an average grade of 15 grams per ton, which means they picked the eyes out of it and left a lot behind. They knew there was veins in the hanging wall and footwall. They drilled it. I'm just going to try to keep it on this view, and you can see there's a series of holes from the bottom level. And what I'm going to do is I'm going to cut a level plan here and show you. That's looking down. So that's looking north and that's looking down. And you can see this is the bottom level of their mine. And they drilled a bunch of underground holes to the north, and they picked up on that vein that we now have modeled. Now we modeled it as B3NO3. So they knew it was there. They knew these parallel veins were there, but they were just focused on the highest grade one where they could high grade above 8 grams per ton and to get the average head grade of 15 grams per ton. As Matt said, times have changed. Gold price is higher. Our cutoff grade now is 2 grams. So we could focus on growing these parallel veins. Another challenge, when they did, a lot of people asked, what about the resource estimate in the old mine area? But problem is, a lot of these underground holes, they only selectively sampled it. So, this hole here, for example, will have been sampled right here. They had 15 grams per ton, but they didn't sample anything outside it. So I expect if you went back and sampled some of these historic holes, and we don't have the core, unfortunately, you would get a lot more gold. So that's under the main mine east, it's so called. The other area, exciting area, and that was results from the last news release, was in this hole here, 384 wedge 1, some nice thick intercepts. And this is trend 1. You can see we had the pilot hole here, and that was news released earlier this year. It had some good results at 384, very encouraging us to infill all of this area. So that's what we're working on now. You can see we've already drilled these 2 holes, these 2 wedges from this pilot hole. And then we're currently drilling this hole. So we're infilling. So it's probably a similar story to here, but we just have a lot of work to do to infill this area, to build it up to a good resource estimate with confidence. We've added some, because of the encouraging results, we added a bunch of targets over here, which we'll talk about a little later. So again, yeah, similar. I'll just cut a section through there. Similar geometries to what we looked at, but just not as much drilling. Lots of work to do. And we find the new, and Hubert may talk about it a bit, but using the directional drilling and the wedging and the branching off pilot holes is saving us a lot of time and money. So that's this zone. The other zone that has been talked about a lot in our news releases and by Matt is this gap. And this is a gap between trend 1 and trend 2. It takes a little while to load this one. There we go. So I'm just going to clean it up a bit. And I'm actually going to step back to the 2023 resource block model and the PEA from last year. So the PEA from last year was built on the 2023 resource model. So it was focused in up here. This is before we were doing all the deep drilling down in here. So you can see there's a very apparent gap in here. And that's again, that's not due to the geology and the lack of mineralization. There's just very little drilling in this area. So it shows up in the block model. And it also shows up a lot in the PEA. So these are the red things are the stopes, the gray, there's the ramp coming down. These are all the development drifts. So you can see this gap is very apparent in the PEA and the block model. So earlier this year, we started drilling it aggressively with 2 drills, using branching, wedging, everything we could do to infill it as best we can. So you can see again these same colors, green assays pending, assays released in yellow, and current drilling in red. We had 2 drills in this area, but now we only have 1. So I think the best way to do, again, I'll do the cross section through here, sort of rotate it around, and this particular scene will give you a sense of the amount of drilling we've done in there to fill it in, eventually get a resource estimate, and then whatever engineering study we do next, we'll have a mine plan based on actual geology drill hole results rather than just a gap in the drilling. So I'm going to turn off so that some of these, again, the yellow has been news released, the green has assays pending, and this is the last hole we're drilling in red. So let me see if I can just turn it off. So I just turned off the assays that are already released. There's this is probably one of them here. That's 387 wedge 2, and you can see there's a 50 gram per ton there, 3.7 gram per ton, good continuity between these, 4 grams per ton there. And again, we keep our vein model up to date. And we know we start connecting the dots and using the geology and alteration to make good interpretations of these veins, just to make sure, well, in this particular area, to make sure we filled in all the gaps. Do we need to go back with the drill or not? And we're confident we've done a good job here, and we extended it to depth. So again, there's no assays yet for these holes. That's 386 wedge 4. 386 wedge 5, but we can see that using these vein models, we know when to expect the mineralization as well. So that is.
I'm just going to jump in here, Dave, and very quickly say that these gaps exist because we know there's a plunging structural trend in the system of veins, and you can see that in the orientation of the plunging main stope in the old mine. It's kind of a linearity that goes down plunging steeply to the southeast, and we can also see that on the meter scale in terms of smaller scale structures. And so when you're drilling, when you're a junior mining company, and maybe you're a little bit restricted in cash and how many rigs you can have, less so now than previously, but drill meters are tight, so you get a hit. And there's this trend, so you put the next drill below the previous hit, and then the next hole below that hit, and you end up doing that for a couple of years, and all of a sudden you've got gaps, you've got trends of resource with gaps in between that you haven't drilled. So even though the plunging linearity we know is a real thing, the question we had was, well, are these gaps real? Or are we kind of like, is it a figment of the data coverage? And this is demonstrating it's a figment of the data coverage, right? So Dave will show you the trend 0 gap. He's already sort of indicated that's where we're drilling from the north. That's a big area that's got no drill coverage at all. So we're very excited about that. So this is very much proof of concept that these gaps are filling in. And that PEA that Dave showed you, that's our snapshot PEA from last year using the previous resource that's now greatly increased. So, that was very much stopes developed on a subset of the total resource. And that gap was very influential on that PEA because you're spending money to put drifts and ramps in on isolated stopes because of that gap. And this type of drilling really changes the economic considerations of an area like that, right? When you fill it in and your development meters are actually paying for themselves with more ore and the ramps are getting more ore and the whole thing becomes leveraged up in terms of value. So that's sort of the bigger picture context of what Dave's showing you here. Sorry, Dave.
Yeah, it's okay. Yeah, just to reiterate, this is the 2023 block model and 2025 stopes supporting the PEA, and it doesn't consider the gap or anything deeper. Okay, so there's another area we're going to look at, and that's from the last press release, this 1.6 kilogram per ton sample that Matt had a little video of, as the core was spectacular. Now, this is again going to the long section, showing the drilling that was used in the resource, but also the current drilling and the assays pending in green. And I'm also showing these bubbles here. That's any assay above 50 grams per ton, and that in red. And then you'll see some purple bubbles, and those are anything over 500 grams per ton. And I'm also, again, I'm showing the visible gold as yellow bubbles. You can see there's a good distribution everywhere. And I'm just going to zoom in on that 1600 gram per ton, which is the highest grade assay we have of any modern assay. We were looking at the model yesterday over here. There's actually almost 2 kilogram sample from the historic mine, but it was very narrow, and again, it was it would have been from the 50s. So probably full of gold. But anyway, there's the 1600 gram per ton assay. Interestingly, and we noticed this, it lines up nicely with the jewelry box stope here. There's a lot of work to be done here. That's just an observation. It lines up nicely with this series of high grades along this level.
Dave, can you explain what the jewelry box stope is?
Oh, sure. Yeah, this is if I'm just going to rotate it a bit so you can see it. This is the main stope of the old mine. And O'Brien was known for its ultra high gold grade samples with very splashy gold. Some of them are in the museum here in Toronto, and those are likely from this stope. And we call that, it was called the jewelry box stope. It's very high grade. Yeah, that was there, and then we've actually thought we've hit some very nice gold above it in the hole 347. I think it was 1300 grams per ton. That could be some sort of extension up here. That's probably this sample 347. Also, the splashy gold in the trenches up here too. So there's something very interesting happening in this particular zone, this plane. I'm going to cut a section through here. Again, it's rotated around a bit. So you can see I'm going slow on purpose just so you can get a sense of everything. So that's a cross section looking west. Now we're looking at the geology. This is the Pichet, southern basalt. There's the conglomerates. There's the fault zone, Cadillac sediments. These are the Pontiac sediments on this side. And here's the 1600 grams per ton sample from 385 wedge 4. That's 180 meters from the contact with the Pichet. So we're well out into the Pontiac sediments. We have other ones though. It's not sitting by itself. If I just turn that off, Well, there's visible gold there, of course. Um, Turn this off. Here, now we're just looking at the assays. We don't sample everything in the Pontiac. Cost savings, time. We only sample where things are interesting. Obviously, this 1600 gram is very interesting, so that got sampled. But there's other sampling we've done in this area. This was in a news release, I forget when, but 337 wedge 13, it was 90 grams per ton. So it's 90 grams per ton here, 1600 grams per ton here, just below it's like 5 or 6 grams. There's some nice hits in this area too. Now, we haven't figured out what is going on here yet. Again, our focus is in the Pichet where we know 80-90% of our gold is currently. So a project's going to happen and we're going to go back here and look at all the core available and try to figure out, why is it there? What's the geometry? What type of fold is it in? We do know from oriented core that from the old mine, we know we have a lot of folds with a fold axis that's subvertical. And that's the historic Pichet, and the historic mine was focused on that orientation of folding, like local folds in the veining. But we also have another set of folds that plunge shallowly to the west, and that could be part of this. We're limited, even though there looks like a lot of drilling here. We're limited in data because I'm just going to rotate that around. You can see this area here. I'm going to show you the limited. So that's looking north again. I'm going to cut a level plan through here. So now that's still looking north. I'm going to rotate it up. You get a sense of that what that looks like. And there's the 1600 gram. The slicer is at minus 450 meters sea level, and it's about 150 meters thick. So it's 150 meters thick this way. I'm looking down now, and you can see this is where we've set up with those 3 holes drilling the mine east. But we have no data anywhere either side of this. The closest hole here is 400 meters away that way. And I don't know, 400 meters away that way, approximately. So when we're trying to, we eventually will be setting up drills here and here, or drilling the other way, but it'll be a while till we have proper data to build out a resource in this area. That give you a sense of what's going on? Anything else to add there, Matt?
No, I think this is kind of showing you that there's a lot to be discovered at O'Brien, right? They started mining here in 1927, but there's a lot we don't know about what's going on and why it's going on and what the full inventory of gold potential is in this project. And this is what I think that's the main takeaway from the 1600 gram sample, right? More question marks than answers right now in that area.
Yeah, there's the you have to look at this number, 180 meters from the hanging wall of the Pichet. Okay, so that's the 4 areas. Just want to talk a bit about the growth and our plan going forward, what we've done, what we're targeting, how we're doing it. But we've decided this is Thompson Cadillac. We could talk about that another day, but there are resources out there. There is potential out there, but in terms of focus, we're focused in on O'Brien. We're going to build that out first. So again, that's the resource block model from March, old mines, current drilling, the assays pending, etc. The gray little dots are our targets. Some of them has been drilled, we got to update it, but we got to focus up in here in Mine West, the obvious target, because the west end of the mine had a lot of stopes, which they high graded. So this trend here exists. Some central. There's this area trend 0. Trend zero is exciting because it's a big gap. This is a huge gap in the drilling, and we believe can be infilled. That gap from here to here is 250 meters. So lots of targets here. We had our targets in this area were focused in here, following down trend one. But because of the good excitement and results we had in this recent, the wedge one from 384, we've added a bunch of targets in here. And we just started drilling this hole, which is going to look for another trend. And we, of course, have resources up here. And again, we keep this up-to-date vein model. That's updated every couple of weeks. One thing we announced last month was we're going to drill down to 2,500 meters. We're going to chase the trend that follows the mine west down to here. The current plan is to drill these 5 targets, and then if possible, these 3 down here. The reason it's this orientation is, these trends and these plunge of the ore shoots, if they, could bend a little bit here and there. So we want to make sure we hit it by drilling multiple targets in this direction. If we find it here, we may modify these targets. That's the one good thing about directional drilling. You can plan as you can change the plan as you go, and with great accuracy. So those are the targets, and then I'll just show you some of the traces of the planning we do with the directional drilling guys. And the guys at site, they're exploration geologists at site. They're all the exploration manager and all the geologists are now everybody's an expert in deep drilling, directional drilling, and wedges, because it's not as simple as drilling a 300-400 meter hole. Drilling the multi-kilometers hole is complicated. You have to be on top of it every day. So our plan, these are planned holes in blue traces. This hole here, this will be our 9th rig going after this. We hope to get that in September. We need a top-notch drillers for this one, and a very powerful diamond drill. It's actually being drilled from the same pad as we're currently drilling these holes. There's some planning going on in here, and then I'm just going to show you from the north. This trend 0 hole, a set of holes are going to be done by 2 different pads. I'm just going to turn it around a bit. You can see, get a sense of that. So there's no infrastructure here, so it's easy to set up a pad anywhere. And challenge is drilling through the fault, and we think we've got that solved. We're still working at it. And then this cluster of holes is being started now, currently drilling this one, 396. These are still pretty deep holes, but nothing like the deep holes down here.
Thanks, Dave.
Okay.
We're going to wrap this up now. I'm going to reshare my screen, try and keep this on schedule a little bit. So hopefully you can see next steps with myself and Hubert. So revisiting that graphic you've already seen, that is our guidance to growth, the 2.3 million ounces, all categories, going to upwards of 4 million ounces. We are sitting pretty confident about those numbers. I mean, basically, we are hitting everywhere we're targeting right now in that main O'Brien kind of camp. We haven't found the bottom of this thing. So the thesis that it'll continue on in the same style to 2 kilometers and we get that type of target is holding true very well right now. Because of Dave's work, we've got a live model. We can see how it's developing numerically as well as geologically. The plan is to keep to interim resource updates through this big 8-rig program. Likely, and we'll reserve some flexibility on this, but likely another one before the end of the year. And then likely, probably at the end of the year, more or less, plus or minus. And then another one kind of at the end of the currently scheduled program, which should be kind of the middle of next year. But again, we're not going to sort of leave it to the end of the program to tell you what this all means. We're going to try and guide you on that interim step-by-step process through it. So feeling pretty confident about all of that. And what we put into our press releases, which we were talking recently as a group, does anybody else do this? I don't know if anybody else does do this. This is the scorecard of our drilling. So we publish every drill hole, right? Even the dusters, right? We're not keeping back any bad holes and then populating, the appendix and the technical report, a year from now, right? Every hole comes out, and we consider any core intercept that grades 3 grams or better, we know is going to true up into a resource block with a 2-gram cutoff most of the time, right? So we call that a hit, right? If we get that or better, we call that a hit, and then we scorecard the hits. So we are batting 81% success rate in getting intercepts like that, drill holes that we think are going to contribute to a future resource. And the reason that's a fantastic result is that if you're actually doing an infill drill program, so you've got an inferred resource and you're tightening up the drill coverage to convert it to an indicated resource and then a reserve, you budget about a 50 to 75% success rate, right? If you get 75, you're doing really well on a resource conversion program. We're drilling into the white pieces of paper on the section here. We're stepping out into the unknown and getting 81%. Right. So this is terrific, right? And that's why we're so confident about the guidance on the upside here, right? This is a growing project. So next steps, 90% of our work right now, the day job is the drilling because it's going so well. So we're fully funded for that 140,000 meter program. We're fully funded to run 8 rigs well into next year, right? Targeting a 2.5 kilometer depth, step-by-step resource updates. We already put the first interim resource update was a meaningful increase. And steady as she goes with all that stuff. What we haven't talked about in this webinar, this was focused on the exploration, is the development path, because there's a mine here. So that snapshot PEA that Dave showed you from last summer was really a snapshot. It was designed to sort of show that there's a viable project here, it can be mined, and we showed you a what if case with the ore going to an adjacent mill under a commercial arrangement there. Very much a what if PEA snapshot. And this project is growing. So it is an outstanding question for us as to whether or not this is an asset that will get integrated into somebody else's mine and mill complex on a basis to be determined, or whether or not this is a standalone project. It's getting big enough to be a standalone project, but obviously with all the infrastructure in the region, that's your first kind of sense of things. So that's a live issue for us. People have a lot of questions about that and what's going on. It's a live issue for us. And it's very much on the front burner for us right now. So that means we are doing engineering work in the background. We are looking at different mine plan optimizations. We're doing environmental baseline work. We're doing community consultations because this is a mine and this will be developed. I'm going to pass this off to Hubert very quickly to talk about some of the capital items.
Thank you, Matt. So before I discuss the balance sheet, I think it's worth highlighting the scale we've achieved. Today, with 457 million shares outstanding and only 2.7 million warrants outstanding, Radisson has a very clean share structure and a market cap of roughly $400 million. That's a valuation of roughly $125 US per ounce in the ground. Put this thing in perspective, between 2024 and 2025, we've added ounces at a discovery cost of $21 per ounce. Combined with very competitive all-in drilling costs, this highlights the value creation potential of our ongoing exploration program. That's a strong indication to me that every exploration dollar we spend has the potential to create meaningful shareholder value. However, the key message on this slide is financial strength. With approximately $45 million in cash, no debt, we are fully funded through 2027 to execute our ongoing 140,000 meter drill program. Simply put, this is the strongest financial position in Radisson's history. Our shareholder registry is equally compelling. Our last 2 financing were oversubscribed, completed without any warrants, and strengthened our base with the addition of several high-quality institutional investors. Institutions now own approximately 26% of the company. Management insiders own 7%, and 27% is held by a group of roughly 40 high net worth investors, primarily here in the Abitibi and Montreal regions. This group has been long-term supporters of Radisson. They know the area, they know the management and the company very, very well. When you combine $45 million in cash, a debt-free balance sheet, a growing institutional presence, strong regional support, and management alignment, I believe Radisson is uniquely positioned for its next phase of growth. Most importantly, this balance sheet gives us something that every exploration company wants, but few actually have: time and flexibility. We have the cash to stay aggressive, the cash to follow the geology, as they was explaining, and the cash to continue creating value through discovery.
Great, thanks, Hubert. And we're almost at the hour, kind of going over time here. I want to leave some time for Q&A. The last slide is the people involved. You always have this slide at the very end of usually at the very beginning. We've got it at the very end here. This is a great project with tons of growth opportunities. The company's in really good shape financially, really good balance sheet. The people involved here are very, very serious and professional people. So Pierre Baudouin, chairperson, he's the guy that built Canada's biggest gold mine, Detour. Most recently, he was the guy behind Silvercrest, now on the board of Coeur. He's very involved, very hands-on. Peter McPhail, former chief operating officer of Alamos. We've got Jeff Swinoga, long history. Lee Chenard, technical person, again, very experienced. Michael Gentili, who many of you will know, he's on the board. He's our biggest shareholder. Very, very influential, very hands-on, very supportive, terrific guy. Cindy Ballons, very experienced in the region, ESG background. Michel Leclerc, most recent person that joined the board. He was formerly started his career at La Ronde with Agnico Eagle, mine manager there, then the GM for Abitibi and Agnico Eagle, then the VP of project evaluation for Agnico Eagle. Has been retired from Agnico for 2 or 3 years now. His joining the board, very experienced guy, mine operator, knows the region really well. Terrific addition to our board. So, fantastic blue chip group of people here, I think. And that's because we all see this as a mine. This isn't an exploration project we intend to drill for the next 10 years. This is a mine, and we're very focused on, is it a small, medium, or large mine? It's getting pretty big. And what is the development path for it? That's why this board is the way it is. So thank you. So Q&A, we're right on the hour here. We do want to leave some time for questions. We'll keep going with questions here. Hopefully, you can stay with us for the Q&A, and we'll pass this off to Christina now, who's going to field these and pass them to the team.
Sure. So if you have any questions, please submit them in the Q&A box at the bottom of your screen. We have a couple already to address. Also, if we aren't able to address your question or we don't address it fully, please feel free to reach out to me at kpelon@radissonmining.com after the event, and we'll address that question at that time. And also, this webinar will be recorded or has been recorded and will be available on our website and our social media, or you're welcome to email me and I can send it to you directly. So first question here is, realizing that it is potential and hypothetical, in a best case scenario, from what you know so far, what is the potential total size of this overall deposit? Matt, did you want to tackle that one?
So I think forward-looking statements fully apply here, right? So please refer to that guidance we gave you. And we've given formal guidance in the form of an exploration target as to what we think that is. So, 2.3 million ounces, all categories, and mostly inferred resources right now. And then upwards of an additional 2 on top of that, which is the top end of our range of exploration target. So that gets you somewhere over 4 million ounces, and that's to 2 kilometers. So if that works out, we're doing about 2 million ounces per kilometer depth, right? So that's your arithmetic, right? Um, and that is pretty big, right? Uh, the Westwood mine is currently, and they've got exploration going on, and it's probably going to grow as well, but it's currently about a 4 million ounce resource, and with about zero point 0.6, I think 0.7 million ounces of historical production. Um, that's what O'Brien is looking like it's going to become, right? Similar scale of ounces. Don't think of O'Brien as something that's small. That is potentially the fastest growing gold project in Eastern Canada right now, and probably almost certainly in Quebec, right? So that's my answer. Forward-looking statements fully apply.
Okay, next question. It appears the resource is very lumpy. What kind of problems or costs is that going to present in terms of grade management when the resource is eventually mined? How does this resource compare in geological terms to the existing nearby mines? Dave, did you want to tackle that one?
Sure. I don't know what lumpy means. It's more, talking about the continuity. Um, there's two types of continuity. There's a geometric continuity of the veins, and there's grade continuity within the veins. So talking about great geometric continuity, we're finding veins when we drill them, we hit them where we think we're going to hit them. So and that's a 100-meter step out, 50-meter step out. So I think the geometric continuity of these veins is quite good for quite standard for an orogenic gold deposit. In terms of the grade continuity within the veins, sure, it's orogenic gold. It's going to be the gold is erratic. It's coarse gold in places. So the geometric continuity is going to be, the grade continuity is going to be, I'm not sure, lumpy, but somewhat erratic, but in line with other orogenic gold deposits. Some very similar. They're all the same. Of course, there's challenges when you mine it. You have to do a lot of grade control drilling, which we're used to in other projects. Very tightly spaced, big samples. It's coarse gold, so you have a nugget effect, you have a challenge. The more you sample, the more gold you tend to get. So that's one of the reasons we've gone to photon assaying. A traditional fire assay may be 50 grams fire assay. Photon assay, relatively new technology. You're you're analyzing 500-gram aliquots. And if we have coarse gold or the geologist likes the zone, we actually assay the entire half the core. So it's a little more expensive, but we do capture the gold that's there. Because with a 50 grams assay on a 2.5 kilogram sample, you may miss the gold if it's coarse. So we're mitigating that risk by doing photon assaying, smoothing out the grades, and ensuring we're capturing the gold. Hopefully that sort of answers.
Okay, next question. Congratulations on all the work. How will the latest 1.6 kilogram hit in the Pichet sediments affect the prioritization of meters in the existing 140,000 meter drilling plan? Reallocation of meters or additional timing? How do you address that?
I'll take that one. We had a debate, and there were 3 holes in that press release last week. There was the 1,600-gram hit. There was a trend 1 deep extension hole, and then there was a trend 1, trend 2 gap infilling hole. And we wanted to put the press release out. Usually we have like 7, 8, 9, 10 holes per press release, and we had 3. And we thought, well, we got to get the 1,600 one out because we can't sit on that. But we had this trend 1 hole, and Dave sort of said, well, listen, for the future of the project, the trend 1 hole at 1,700 meters had multiple zones. That's actually more important for us in terms of ounces, because that was the first wedge of the deep. It was 384, I think, Dave. I can't remember the number, but if it was 384, the pilot hole in that area had gone down to 1,900 meters, or deepest ever hit, and it hit really nicely. This was the first wedge. It was a couple hundred meters away at 1,600, 1,700 meters, and it hit multiple zones. So in terms of the vein model, building out the vein model, targeting additional wedges, converting to resources, that was far more ounces for us, the implication of that hole, than the 1,600 hole, which was super high grade, sitting in the Pontiac. And we were confident enough with that 1,600 hole to say there was something happening there, because there is something happening there. You've seen all the cluster of intercepts. There's the 90-gram one there. There's no drilling above there, right? Because we're not trying to drill through the old mine. So there's no, on Dave's section, you saw there's nothing above, and there's 400 meters on both sides. So I don't think we're going to go chasing, I think when we go chasing that type of hit, we can be chasing for a while. I think we've got to stick to the plan, and the plan is pushing out the vein model, adding ounces, getting to that much bigger result. And that trend one hole on that press release last week is that hole, right? That's the one that's actually telling that story. So yeah, we're gonna hit the 1,600-gram stuff pretty regularly because it's there, right? And I think, in a resource, of course, you cap that down. Most of that disappears in the capping process. It's a type of thing that the miners are really going to enjoy coming across. From a resource point of view, it's probably should stay focused here on the bigger picture. Dave, anything to add to that?
No, I agree. I agree. The bigger tonnages in the Pichet, and we will. That's not going to stop us from doing our study and oriented core in that area. Try to figure it out in the meantime.
Okay, next question. Given the size of the resource and the neighboring infrastructure, what would be the considerations and trade-offs between building a mine versus selling the defined deposit to a neighboring company?
Well, it's all about shareholder value. We've got at least 9 mines have been built by members of this board, so we know how to do it, and that always is an option to keep carrying the ball down the field and go all the way to a standalone operation. Certainly, the project's getting to the stage where it supports that quite readily in terms of the inventory of gold. But ultimately, it's all about shareholder value. From a project point of view, it's always going to make better sense for it to be integrated into existing infrastructure. And there's nothing that can compete with that. If you don't have to build the mill, if you don't have to, put in associated infrastructure, mine infrastructure, things like shafts, you're always going to get a better result. But at the end of the day, that question is strictly settled by what is the best outcome for shareholders, and our biggest shareholder is on the board, Michael Gentili. So this is certainly, I think shareholders can take a lot of comfort from that. And, there's a lot of gray hair in this company, and that's what we're about.
Okay, today, what would a likely processing cost be per ounce by a third-party entity like Agnico Eagle, IAMGOLD, or similar neighboring entity?
We made some estimates on that in our PEA last year, where we had, under an MOU with IAMGOLD, we had looked at the viability of the Doyen mill, which has a flotation circuit to take O'Brien ore, and we worked out the recovery numbers for that scenario, and then we published a what if scenario for our ore going there under a what if toll milling scenario. That was very much our study, not IAMGOLD's, and everybody should be very clear about it. No such arrangement currently exists, but there was an MOU where we were collaborating on some of the technical criteria, and that birthed the PEA on our side. I'm going to, so I would refer you to that study for the actual numbers that we were assuming at that time. But I am going to reserve comment on that question because I think it's a bit of a loaded question that is quite relevant to us right now. I think I'll answer it in general terms. Um, uh, we know the ore is technically compatible with nearby mills because we've done the work and we published the scenario for one specific mill, but we know in a more general case, it can go to a variety of different mills. The grade allows it to go some distance to get to those mills. Um, and the terms under which it goes to those mills and is processed is something I think that is uh, I would say it's a work in progress. But I also say it's I'm struggling to give the specific right answer to that one. Um, I think it's a very, very contextual and variable thing, right? And every mill is a little bit different. And best thing I can do is probably is refer you to the study that we actually published showing such a scenario on that what if basis, which was the reason we did that study, right? And leave it there.
Okay, if you do get to 4 million ounces, is that when you make the decision to start mining? Um,
Um, I think there will become a natural time when the focus becomes less step out and growth and more infill and definition. And I think when we cross that line, we will be in mine development mode, right? Because the purpose of a definition infill program is to convert and infer to an indicator, which gets you a reserve, which you need for a pre-feasibility. And then you're um, into that track. Right now, we're still in step out growth mode. And again, as I said at the beginning, we're not scared about depth because we know that that infrastructure is around us. So we're going to go to 2.5, which is kind of almost the limit technically of drilling from surface. Um, so yeah, I think our mission is clear right now. Step out growth, and we're having success with that. And I think, yeah, 4 million, if we get there, will be about a 2 kilometer line. We're still, again, we're drilling below that, so that will continue. But I'd probably at that stage, we'll start thinking about, okay, well, let's start banking these ounces as a higher quality resource and think about timelines and paths. We're not quite there yet.
I think you kind of addressed this question, but maybe you can nail home the point. So, with all the drilling you are doing, when and how do ounces get converted from inferred into indicated? It would seem 140,000 meters of drilling with 8 rigs going, that it would happen over the next 6 months.
No, next 6 months is still very much step out and growth. Yeah, so I think that we've budgeted the 140,000 meters being the meters last year, the meters this year. I think 72,500 meters this year with the 8 rigs, and then meters in the first half of next year. So we may go onto a different track based on results through this process, but we're still per our budget, and we're going to be stepping out and in growth mode through to the middle of next year, likely.
Okay. And you've also kind of addressed this one as well, but the question is, conceivably, this land package could be bigger than 4 million ounces as a question.
Yeah.
And this is the last question. Has there been any interest from any large institutions to own more shares?
Um, uh, uh, I'm hesitating because I'm just asking myself what is allowable to say in a public forum. Yeah, I'd say yes for that.
Okay, and there's actually one final question that has popped up, and I think that's probably a good time to wrap it. What is the distance of step out versus what you need to convert from inferred to indicated ounces?
Dave?
We're doing a variety. Our step out drilling sort of depends on what trend we're on, and if we're going down the plunge of these chutes or laterally. But we'll often step out, 50 to 100 meters down plunge. That's our step out. Maybe sometimes 50 meters laterally, east west, just to grow it, to ensure when we hit, we get at least inferred resource. For indicated, it's two or three holes within 50 meters. That's what the QP has used based on the continuity of the mineralization.
So thanks, everybody. We went over there about 15 minutes past the hour, but hopefully that was useful for you. We intend to be putting out a pretty regular stream of drill results news releases. Hopefully this video puts it into some context. Hopefully we've communicated our optimism about the growth here. Thanks for spending some of your morning with Radisson Mining Resources. Thank you.